So good afternoon. Welcome to Friday, and this is Business as Usual. I'm Audrey Russo, President and CEO of the Pittsburgh Technology Council, and joined here today by Jonathan Kirsting, who's the Vice President of Visibility and all things media. We are very thrilled to have our guest back again, Dr. Kelly Hunt, and I'm going to introduce her in a moment, and we're going to dive into all new things that are happening in terms of the Payroll Protection Act and anything related to the incentives during these times. So I want to give a shout out to Huntington Bank for their support and for their work, particularly on the topic that we're going to be talking about today. They are the #1 SBA lender here in southwestern Pennsylvania. Just a quick programming note about next week. We're excited to be hosting John Thornton. He's the CEO of Astrobotic. He's going to talk about the privatization of space exploration and what that means for Pittsburgh. Just moments ago, they had announced another major contract with NASA. This one was for nearly $200 million to deliver a NASA rover to the moon. So we're very excited. Tuesday, we will have Jerome Bettis and the Executive Director of the Bus Stops Here Foundation. So we'll be talking about that work that they're doing. And Wednesday, we're going to be joined by Michael Couch. I'm going to be talking about promoting positive organizational culture in the times that we're in right now. So as you can see, we're continuing to provide lots of interesting people to talk about the matters that are at hand that affect all of us each and every day. So we've muted your microphones, and I just ask that you keep it on mute. I also ask that if you have questions for Dr. Hunt, she's happy to answer them, and we just want to get through some material. Do not use this as an opportunity for advertising. So now I'm going to jump in. I mentioned that we're here by Kelly Hunt. She's the District Director of the U.S. Small Business Administration, and County Executive Rich Fitzgerald and Speaker Michael Turzai are the only two officials who have appeared twice on our show. But today, Kelly is making our third appearance because what she does matters to each and every one of us. So thank you for always being so accessible. You might not realize this, but she is completely accessible, even behind the scenes. I can't tell you how many times that I've actually reached out to her on behalf of so many of our companies, and she has an insanely swift response time, even if it's late at night or early in the morning. So I cannot thank you enough for being accessible and for caring so much about making southwestern Pennsylvania amazing for people, particularly in these times. So, and you know that's true. You know that's true. I've written you many times, and you have. You have.
You're a late nighter.
So you've been awesome. So before we talk about the changes that have recently occurred in the Paycheck Protection Program, PPP, can you share a quick update on how the program is actually running to date? Are you still making new loans? Is there any funding available, et cetera, et cetera?
Sure.
So, thank you.
Sure. So the Paycheck Protection Program, I'll be calling that the PPP program throughout the presentation and our discussion today, is doing really well. I mean, it's, you know, maybe some people didn't like what it was supposed to do, but it is doing what it was supposed to do. We saw last week with the jobs report come out, and much lower numbers in that than we thought. We thought that we were really going, the nation was really going to be in trouble, but there were a lot of jobs that have been saved because of the PPP and you know, protecting people's paychecks through these forgivable loans. So to give you an idea of what it looks like, you know, we had 2 phases of money that got poured into that program. Right now, we've had about 4.5 million small businesses applied for funding through the PPP and were awarded over $510 billion. So 4.5 million businesses, $510 billion. So we have infused a lot of money into the private sector, into our small business community. And so, you know, we're really proud of that. You know, those 4.5 million small businesses represent over 50 million American workers. So a lot of people have been able to stay employed, and not just stay employed, but keep their medical benefits, their retirement benefits, all those things going when businesses were shut down. So we're really excited about that. To give you an idea, with those numbers, they they sound really great when you talk about in the United States and you look at those large numbers. A lot of people ask them, but yeah, but how did Pennsylvania do, you know? And so Pennsylvania actually did really well. You know, we're not one of the larger states by square mileage, but we do have a pretty high population, and we do have a high population of small businesses. So Pennsylvania has ranked 6th out of the nation in the number of loans and the dollars of loans that have come into Pennsylvania. So we're real proud of that. We think that, you know, our businesses got their fair share. You know, when you think of 6, we were beat out by like California and Texas, New York, states that have a lot more small businesses than we do. So we've had about 160,000 loans for about almost $21 billion. So over $20 billion came into Pennsylvania through the PPP. So it gives you an idea, you know, like I said, the program's working. People might, you know, have wanted it to be a little different. And we're going to talk about what those different look like and some of the things that legislators have heard from the committee and from the small business community and changes that have been made. We'll talk about that later, but there's still money available today in PPP. And you know, I got asked a question by the Pittsburgh Business Times recently, and I was thinking about the answer to it and talking about, like, you know, we're already now into the beginning, almost the middle of June. Like, is there still a need? Should businesses think about the PPP loan for their business? And I, you know, as thinking about it, I realized that there is no better time to get a PPP than now. People got PPPs early on when businesses were typically closed. So when the business wasn't open, you know, they were able to pay their employees. But if you're a business that didn't get a PPP and you're thinking about it, think about doing it now, because your businesses are starting to reopen. We know that revenue is going to be lower. You know, if you're a restaurant or those types of businesses, they're at minimum capacity. If you're a technology business, you're still going to have a curve where it's going to take a while to get not only your staff back engaged, but also to get that part of the market share that you had before. That may take time. With the PPP, you're able to get the money to pay your workers while they're working, and you're able to get your business up and running. And then any revenue you make, you can use for other expenses that the PPP wouldn't cover. So it's a great time to do it. Don't miss out on that. I had mentioned that there were $510 billion have been allocated and lent out through PPP. We still have $130 billion remaining in PPP. So you're talking about still over 1/5 of the amount that we've lent out, we still have available. So there is a lot of money available still. The program closes on June 30th. So you still have a few weeks. Don't call your bank on June 30th and think that you're going to get a loan. You need to make sure that you're, you know, working with them the days before that so that they can have that loan prepared and submitted to the SBA by that June 30th deadline. So that's still, like I said, there's still a lot of money there, a lot of benefit of taking it, and we'll talk about that when we talk about some of the updates. I do want to give a really quick update, not in as much detail, but on the EIDL program. That was the Economic Injury Disaster Loan Program. That is a program that, unlike PPP that was administered through our local lenders, the EIDL program was administered directly by the SBA, where we lent out taxpayer money from the SBA. This program, I'm not even going to, you know, I wouldn't even tell you that it's been fantastic. It is an excellent program, but it has not been without some problems in getting it running and getting the loans funded. The SBA, you know, is a very small agency. We didn't have the manning to do the amount of loans that we were bombarded with. And so they are behind on those, but they have geared up, hired a lot of people, and they are really working. We have 5.4 million applications still for EIDL in the portal that will be getting funded soon. We've already funded about 1.1 million have already been funded. $2.2 billion in Pennsylvania has gone out in the EIDL program. So, smaller than what we saw in PPP, but still significant, 2.2 billion is not bad. So, the loan officers are approving about 50 loans each per day. So they are working at getting this money out there. That program has been closed down. The EIDL has not been taking new applications for the last probably a month or a little over a month. They've only been taking applications from the agricultural community or agribusiness. I did listen, I think it was on Wednesday, our Administrator Carranza testified in front of the Senate Small Business Committee. And during her testimony, she stated that the EIDL program will reopen within the next few weeks. She said 2 weeks. It will reopen for applications from non-agricultural businesses. So that information is nowhere out there in the public except for if you watched her testimony, but she did say it will reopen. So for those of you on the call that have thought about EIDL, know that keep an eye on that. It should be reopening soon.
And
so that's kind of an update. Yeah.
So they would go to your website, right? They would go to the SBA website. Okay, so we'll put that website up in the chat, and then
Absolutely.
They'll find the information there. So let's jump into Congress, sent some important changes to the president's desk that impact the payroll, the PPP program. Can you talk about these changes?
Sure. I can give you some information about them that we've been given that kind of highlights some of the factors that we think are really selling points on that. So as Audrey mentioned, last Friday, the president signed a bipartisan act that had been passed through the House and the Senate. He signed on a Friday. It's called the Paycheck Protection Program Flexibility Act. This act is a direct result of all of the voices of the small business community that were expressing concerns in areas with the existing legislation. It didn't fix everything, but it did fix some things. So some of the highlights that I want to talk to you about is the first one was that we had a lot of complaints about that 8-week period. If you remember, if anyone ever heard me talk, they heard me say, your 8 weeks starts from the day your loan is dispersed. You have 8 weeks to spend that money, and that's it. They have changed that now from 8 weeks to 24 weeks. So that has been greatly increased. So from 8 weeks to 24 weeks. So if you are in the process of your loan, say you already were funded, you've got your loan, maybe you're in week 5 of your loan. What does that mean to you? It means that you can take up to 24 weeks to spend that money now if you want to. So that is something that is retro. Unless your loan is already closed and been paid off, then of course you can't, access it again. But that one does, that change will affect everybody who is in an active status right now. Along with that, another concern was the percentages. So if you remember, it was 75% of the funds had to be used on payroll, 25% on utilities, rent, mortgage interest, just those three. 75, 25. They have changed that allocation now to be 60% on payroll and 40% on those other costs. The same costs still apply: rent, mortgage interest, and utilities. Those are the only costs for that other 40%, but they have lowered that to 60%. That as well. So if you're already in the middle of your PPP, or you're going to apply for a PPP, that new percentage would apply to you. You can swap that out and spend more on some of your operational to get caught up on your rent and things like that. So that's important. They also put a couple safe harbors in there for loan forgiveness. So they want to make sure, when I watched the testimony the other day, that was a big thing that the senators had to say. They want to make sure that the SBA and the Treasury are letting businesses know that they are doing everything they can to make it where they forgive your loan, not try to find ways to not forgive your loan. And so these safe harbors are something that were put in there to help that. One is if the FTE. So in the first round, when we talked about that first interim final rule, it said that you had to immediately rehire all of your people at the same level of FTE. That has changed now. So now you have all the way until December 31st to get people hired. And then they also put something in there. What if you can't? What if your employees don't want to come back to work? What do you do then? And you can't hire people at their same level because we just don't have workers out there to hire. They will take that into consideration now, and you can actually get a safe harbor against that. I will tell you that it is important to keep your correspondence. So if you have offered positions back to employees and they have declined those positions, you need to keep that. We found in a lot of lower paying jobs, maybe not so much with the tech community, but in some of the lower paying jobs, we found that people didn't want to come back because they were making more money on unemployment, and that was a big issue. So you keep track of that, you keep those records, and you're able to actually have those FTEs removed from the equation so that you can get your entire loan forgiven. The last one that I want to kind of briefly discuss is the deferral payment for periods. It was 6 months. They said 6 months from the time that you get the loan, you don't have to make payments on. That has been completely changed in how they figure that up, and it can be actually 16 months now. So if you have a portion of your loan that is not going to be forgiven because you've spent money outside of that 60-40 ratio, then you can have 10 months after the date of the loan forgiveness. So you have to apply for loan forgiveness within 10 months after your loan, the money is gone. So you have now, it could be up to 16 months that you're not making a payment on that amount. So that really extended that as well. So those are the big changes. Of course, there's a lot of little stuff that's kind of still has some gray areas, but those are the ones that people are the most interested in.
And so healthcare is actually part of that, right? Any of the healthcare payments that you pay on behalf of your employees?
Yes. So when we talk about payroll, we don't mean just salary. Excuse me, let me grab a drink.
Mm-hmm.
So when we talk about payroll, we're not talking about just salary. We're talking about the whole payroll package. So that would be your group health care, that would be retirement benefits, it would be state and local taxes, but not federal taxes. So that whole package.
Mm-hmm. And so if you've already received your PPP, you can't apply again, can you?
You cannot apply again, no.
Right. So
but if you're still spending, you can. The only one of these that you cannot take into consideration without going through your lender is going to be the fact that with the PPP, it was a 1 year, if you remember that, you had 2 years to repay the loan at 1%. The new legislation, the new Flexibility Act gives you 5 years to repay the loan at 1%. That will need your lender's approval because you've signed loan documents that said 2 years at 1%. So you would have to get approval from your lender to extend that to 5 years.
Okay. So is this information out on your website yet, or are we just getting it fresh from you right now?
This information is in a press release. Most of that you can find in a press release that is on the SBA website. So yeah, you can get a hold of at least what I told you.
So I just want to remind everyone that PPP is what you work through with your bank and your lender.
Yes.
The EIDL is directly through the SBA. And so sometimes people get that confused. So thank you. Thank you for that update. And that's quite a change.
Sure.
So really appreciate that. So let's switch for a second. We've hosted a couple of sessions with the African American Chamber of Commerce in Pittsburgh, and to help specifically outreach to minority-owned businesses. Can you talk about how the SBA is reaching out to minority-owned businesses and other things that we should be thinking about and offering to further help your efforts?
Sure. That, right now, that's a very important question, but it's been an important question for the SBA all along.
Right.
That's been a priority I've worked for both administrations, Republican and Democrat, and that's always a priority for the SBA, is making sure that our underserved communities have access to everything that we have, whether that would be training, lending, or anything. So we have a lot of things in place to do that. Here in Pittsburgh, we cover the western half of the state, so we have urban areas and rural areas. We're always doing outreaches in both, so we're doing those types of things. A couple things that, particularly when we talk about access to capital in the PPP loan program, one of the biggest things that the SBA did on that program to ensure that the money was getting to the people who need it the most was to approve what we call CDFI lenders. Those are community development funding institutions. These are local lenders who are out there in the communities lending money. This is like the Progress Fund. So these are people that are out there, and they're working with different groups, and so they became able to do the PPP lending. We have two more that we're working with, Northside and Bridgeway Capital. They're in the process of getting approved. I know Bridgeway Capital is not approved yet, but they actually have a workaround in place. So if somebody would go to them for a PPP loan, they're working with somebody else that they can do that. That's extremely important because these people have credibility in these communities, and they have relationships into a lot of the communities that we're talking about. Right. So that's a great way to do that. And when I keep mentioning that testimony, that was a question I think that was Senator Booker had asked about the SBA, and he wanted to make sure that those relationships don't end when PPP ends. And so I think that you're going to see a larger commitment, and I think that, like I said, that it's a great way to reach people that maybe wouldn't typically come in and go to a larger bank. So it's a great way to do that. Another thing that we do in our office that we are really working with in the SBA to help minority businesses is through government contracting. And a lot of people, especially minority-owned businesses, might think like, oh, I can't do government contracting. That's too big. There's too much to do with that. But we have programs specifically designed for minority businesses to get involved in government contracting that are amazing. These programs, one of them is called our 8A program. It's a 9-year program that a business can get into. We take them into this program. They kind of are under our wing. We help them to work on getting contracts that are sole sourced and set asides, to start building up their portfolio of government work, so that they are doing work for the government. They can build up that portfolio, and then we help to get them partnered through mentor proteges and joint venture agreements with other businesses like them, that they could partner together and go after contracts together. And they do that in the middle of that 9-year period, and then as they're transitioning out about year 4, they're actively bidding on their own contracts. So, and then they're doing that so that when they graduate from the program, we have minority businesses here in Pittsburgh that we could, talk to you about, and that have done this, and they are very successful. These are no longer small businesses. They're businesses now that, their revenue doesn't even meet the definition for small business. So these are great ways for minority, women-owned, and service-disabled veteran-owned to get into that contracting arena. And so those are some of the programs, like I said, but we are always actively out there, in communities. We'll work with any group that wants to have us. And so just know that.
Well, good, because we will follow up on that.
Yes.
So we will continue. Before I get to sort of the last question, Jonathan, there are a bunch of questions that are out there.
Good ones, absolutely.
Dr. Hunt.
And Dr. Hunt, I can say for sure, since you've been on the show 3 times, I know we've helped at least 3 companies access funding minimum. So we're making an impact, and I love it.
Good.
So here's our first question here from John Fry. So once FTEs have returned to work, how long must they be retained, or retained at 40 hours per week instead of a lower number?
You have to bring them in, and during the time that you're using the Paycheck Protection loan to pay them, they need to be at that same FTE, same salary level. Now, once your time ends and you're out of PPP money, if you have to cut back their hours or lay people off, there is absolutely no penalty against you. You know, we're hoping, you know, I think initially the legislation was written in a way that they hoped that the pandemic would be over and we would return to normal. That's not happening nearly as quickly as we had hoped. I would, you know, I can't forecast the future, but I would say that there will probably be other stimulus packages, you know, coming down the pike that'll address that better. But it's only till the end of that when you've exhausted those funds.
Absolutely. So we have a question from Danielle Davis. She asks, is it 25% loan forgiveness on non-payroll costs such as rent and interest?
That's what it was, but the new PPP Flexibility Act changed that to where 40% of the PPP loan can now be used for non-payroll costs, including rent, mortgage interest, and utilities. So that is now 40-60 instead of 25-75. So you have a much larger portion that can go to non-payroll expenses.
Excellent. And Rhea
you can still use 100% on payroll if you want, you know, but you can go down.
Rhea David has a really interesting question here where she wants to know what happens if someone resigns in the middle of PPP for a full-time employee?
That when I had talked about that, some of those new changes, you have that safe harbor now. So if you have an FTE that resigns, all you need to do is keep documentation of that and it will not be held against you when you go to apply for loan forgiveness. That's part of that safe harbor to protect the business owners from being penalized when they have no control over keeping an employee.
Absolutely. And Audrey, do you want to take Marcel's question?
And Marcel has a question here. That they run an LLC small business that provides robotics and programming classes for children. After closing their doors in March, they applied for the EIDL and this week received the contract to sign. There's one clause in there though that they're unsure of. It's called the limit on distribution of assets. Does it prevent them from distributing any profit in the next 30 years or the day that they pay the loan to the owners on the K1 basis?
Not that I know of, and I've not seen that question before. That might be something that Marcel could reach out to me.
I'll connect.
Yes, and we can explore that, but I don't believe that there is any, you know, anything like that.
So I will do that. And then the last one, if an FTE is recalled at 40 hours, can the pay be reduced from what they were earning? Let's say a reduction of 10% in hourly, but it's paid for 40 hours? It
should not be during the time that you're using your PPP loan, because you have, when you submitted for that loan, you used the payroll that you were paying that person prior to the pandemic. So the numbers you plugged into what you were going to ask for were based on giving that employee the full paycheck. So you're not, you got to remember, this isn't your money. This is the government giving you the money to pay them. So you want to keep them at 100% of their payroll. You shouldn't be lowering their hour. You can lower their hours as long as you continue to pay them that wage that they were making before.
Okay. And I think there's another one, and I'm not sure, it's from Joanne Felice, and she's saying, is the loan forgiveness application beginning changers?
Okay, I know what she's saying, and yes, there will be there will be new applications out. In fact, they were out, they were pulled back down on some of these. The loan forgiveness application most definitely is changing. Part of that is because of the Flexibility Act. It changed so many things that a new application has to be done. And you got to remember, you have 10 months after you're done spending your money now. You have 10 months to even apply for forgiveness. You're not making any payments or anything. So I get people calling me all the time like, oh, I have one more week. Why? There's no application. You know, you have 10 months. You know, your bank will let you know. They'll work with you. You know, you've got plenty of time on that. Let you know that the U.S. Department of Treasury is working on that application, but it will be out soon.
So essentially maintaining those FTEs are required for the 24-week period, just as they were for the 8?
Well, it's required for the period of time that you're using the PPP to pay salaries. So when you apply for forgiveness, if you used up all your money in 12 weeks, they're going to ask for payroll records for that 12-week period.
Right.
So you want to, whenever you're using PPP money, you've got to keep everybody at that salary level that they were prior to the pandemic.
For that entire period that you
Yes.
have. Okay. So as you can tell, Dr. Kelly Hunt is filled with lots of great information.
Yeah.
That
She knows it all.
spewing
Yeah.
out,
My head starts to spin.
spewing it out. And we've put links up there. We'll follow up on some of the questions we haven't gotten there. But what have you learned about the tech community since this whole episode started?
Well, I learned that a lot of the tech community was not able to take advantage of the PPP loans because of some of the affiliate rules and things.
Right.
And that was a shame. I know that, you know, we worked together, and I know that I had voiced that concern to some of our legislators. And unfortunately, I don't, you know, a lot of that didn't get changed, but that I think is a real blow, especially to Pittsburgh. I mean, you know, but, you know, I know you folks are very resilient and you are very creative and will find ways to get that money that you need, you know, to grow your community even during this. And so that's been really good for me, you know, and just really, you know, learning different ways, like how we had talked earlier about the government contracting and things. You know, I think that, you know, I'm not going to lie, and I'm going to be really honest here. I think the tech community is something that is very intimidating to the SBA. We're really good at starting restaurants and coffee shops and nail salons, you know what I mean? But when you think of the tech community, you think of these people that are extremely bright, intelligent. You guys have so many resources out there, even in the Pittsburgh area, you know, where organizations are built to help the tech community. And I think that it was an area where, as the SBA, I didn't know that we had a fit. I didn't know that, did we fit in? Could we offer anything of value to you guys? Because, you know, it's the tech community. And so I think that having the opportunity to meet your leadership team has been amazing. And, you know, and be able to, you know, talk to some of the companies that have reached out to me personally, I think has really helped us to see ways that we can fit and have that partnership, have that relationship going forward, and add value to what your community is doing. So I do appreciate that.
No, we appreciate your time. What we'll do is there are still some questions that are actually in the group chat. We'll follow up with them. I think there are things that you can definitely answer right off the top of your head. So I really appreciate that.
I will say real quickly, I see a question there about the $100,000. That's still the cap. It didn't go up. So it is still just $100,000. So if your money's gone in 8 weeks, it's gone in 8 weeks, but yes.
Okay, good. Okay, excellent. So Dr. Hunt, I hope you have some rest this weekend. I thank you so much for being such a great partner to us. We have a lot to follow up on. And you really have been a tremendous asset, both personally and professionally, to all of us here. Absolutely. So on that note, I'm going to end for the week. Join us on Monday when we have John Thornton from Astrobotics, who, by the way, Dr. Hunt, $200 million government contract here.
Congratulate them for me, please.
Yeah, good stuff.
And if you have time, you should tune in.
I will.
And I want to thank everyone for joining us, and have just a great weekend, and we'll see you on Monday.
Sounds wonderful. Thank you.